Hey guys, welcome to the channel. In this episode of Unfit Analysis, I'm gonna cover the weekly report of Indian equity market. Friday was a day when the market fell, more than 9 lakh crore rupee wiped out. So I'll try to decode this entire thing, why the market has fallen the last day of this week, and we will read it from Mint, and I'll try to decode their analysis to you. So yeah, let's get started. So this is a Mint website, and today we wanna decode what are the reasons why Sensex and Nifty, Sensex fell by 1200 points and Nifty fell by 400 points. So what are the reasons why those 9 lakh crore rupees wiped out on Friday, 25th of April? So we're gonna decode this entire page for you guys. So yeah, before talking about the first reasons, I would like to express my sincere condolence to their families who lost their lives, their loved ones. They died in a terror attack. It was a very coward attack, and no amount of words can help their families. May God keep their families strong and may their soul rest in peace. So, talking about the first reason why the market fell. So, there's a terror attack that happened in the Pahalgam. So, it depicts that there's a global tension that is going to happen for between two countries, between two trading countries. Okay, so since we are living in a globalized world, we are not an isolated economy. We are trading with each others, we are doing businesses, we are buying and selling stuff from each other. So because of this reason, there will be escalations from both the sides. This escalation will result in uncertainty in businesses, uncertainties in import, uncertainty in exports. So, while we keep this reason in our mind, we should also make sure that we know what kind of trading partner Pakistan is of India. How much we are trading with Pakistan. What's that amount? Uh, the amount is below $500 million. We are not even importing and exporting more than $500 million. The amount is below $500 million, and Pakistan is not at all a relevant or a very big partner, or in terms of trading. We do have some other major big trading partners like United States, China, UAE, and Pakistan is nowhere. So considering that thing in mind, I don't think it's gonna be here for a very longer period of time. It's even same ICIC Securities also says the same thing that in short term it might escalate. It's gonna impact. It's gonna create some kind of uncertainty, but in long term, this sentiment will not result in the fall of equity market. So this reason will only confine to the very short period of time. uh, and yeah, I'll float it to the top. So talking about the second reason, profit booking after a recent rally. uh, in my last video when I talked about the crashed, after that crashed, we had somewhere 9 to 10% of rally. Right from 7th of April, market was at 21,731, and today it closed close to 24,000. So it was a rally of 8 to 9%, which is a really good rally. And there's a very common belief in the equity market that people usually do, uh, profit bookings. There will be always correction. You will never see a straight going up market. It will never happen. There won't be any straight line. There will be, higher highs and making some dips, corrections. We call it corrections because traders, they are traders in the market, those who buy at the low and sell at the high. So for them, this might be a new high for a short period of time. So it's called profit booking. So this 8 to 9% of rise will result in profit booking. Some of the investors, traders, some of the institutional players would have sold their holdings to realize the gains. Some of the people would have bought it on 7th of April and would have made some 8 to 9% in a very short period of time. So because of this profit booking, the market has fallen. it is very common, it happens in equity market. Equity market will never go up, in a straight line. There won't be any straight line when the market will go up. There will be dips, and these dips are called corrections, or sometimes profit booking. So but again, uh, you know on the other hand, when the market falls, it falls, like a knife. But when it goes up, there will be correction. So because there will be traders, there will be people who would be, booking the profit, who would be interested in taking out their money from the market by making up some money. So yeah, this is the second reason. The third reason, and and I have a lot of thing in my mind. I have a lot of information to talk about this reason. Was a global uncertainty. uh, so if you will see the past 5 years, there's been a lot of uncertain market around the globe. There's a Russia-Ukraine war, there's a tariff war, there's a Iran-USA, and there's a Iraq-USA, there's Afghanistan, there's like more and more countries, they have been fighting, and there's Bangladesh on the other hand. So uh, you know the economic uncertainty comes here when there were so many countries look so uncertain. But our own country, India, has been very immune to these things. Our equity market has really delivered a very good return when we talk about in terms of the benchmark, in terms of other equity market. We are very immune. We have done a really good job in terms of giving very decent return. Not talking about the past year, from 2024 to 2025. After COVID, Indian equity market has been doing phenomenal. But the third reason says that we cannot remain more immune to these things, because ultimately we are living in a globalized economy where all the countries, the entire globe is connected. We all are doing businesses with each other. And because of this reason, it talks about that Indian economy is not that immune, that it won't fall. The market won't fall. The economy won't react. It will react. Though we have very stronger demand, internally, there's a lot of demand in India. There's a lot of thing going on in the country. There's a lot of development. It's an emerging economy with, 6, 7, 8% of annual growth. But this doesn't mean that we are completely immune to the global uncertainty. Therefore, these supranational agencies like World Bank and IMF has cut the growth percentage of India. Okay, this is the reason why the sentiment of equity market was not up to the mark, and it reacted in a negative way, into into a into a sell off, and that's why the market fall fell. uh, Today, yeah, today I think it's 26th. I'm recording on 26th, and I think it's late night, and Friday, it fell on Friday. So yeah, fourth reason, I have got a lot to talk about it, but it will increase the size of my video. And I think I have talked the major points here, the main crux. Fourth, mixed Q4 earning failed to boost the market sentiment. So I think this is the fourth point, and in every quarter I see this point, about mixed Q4 earnings. There are a lot of analysis, there are a lot of research paper, there are a lot of equity research. These makes news that this quarter the Reliance or XYZ company or HDFC Bank or yada yada company will grow by 10% or 11%. And when time comes, these companies might not beat the expectations. These companies might fell short by some percentages. So because of that falling short, it creates a kind of mixed reaction. Some people will say that no, this quarter was not good for this company because it couldn't beat that estimation. So it creates a lot of mixed reaction, and ultimately it creates uncertainty, a Q that is negative, and it cause sell off to the market. This is very common point. This you will get in each and every quarter. Whenever the market falls, this point is very common. The mixed earning fail to boost the market sentiment. Uh, Fifth point is talking about the key resistance, which is at 24,350. So there's a very common term in technical analysis, that is support and resistance. I'm not gonna talk here about support and resistance, what are technical analysis, but this is a chart of Nifty, and Nifty was facing a resistance at 24,300. So as per the technical analysis, Nifty is bound to face resistance at 24,300. So when it turns 24,300, it came down. That's the reason why it fell. It didn't fell that much. If we can see here, I'll zoom it. Uh, it didn't fell that much. If you'll see these candles, these are very small candles, which shows that sellers were, they were not that strong. But this Friday, this looks like a very bearish candle. Let's see what happens on Monday. And this was the fifth reason why the market fell. So yeah, this is it from my end, and I think I have decoded the mint news. As per my understanding, I also read Wall Street Journal, and I also read a few other things like Economics Times this week, and those were the analysis. I'm sure that I'm not only confined to what they have written here, but I have read some other sources also. So these were the points, and uh, and I'm gonna talk about the U.S. Treasuries in my next video. There's a lot of buzz going around in the U.S. Treasuries. Uh, People are talking about they are not same as they used to be. There's a lot of news. If you will see, a lot of buzz going on. What are U.S. Treasuries? They are, because they are called the safest instrument in the on this planet. They are backed by the government of USA. So on the next video, in the next video, we're gonna talk about U.S. Treasuries.